Welcome to DeFi Crypto and Airdrops. I am Myke, aka Veteran Crypto, coming to you live on YouTube and the Arena. If you are watching us on either of those, I welcome to the chat because that's pretty much the only place that we're able to see your messages. Of course, we can see them on X, but you got to have that blue check mark to chat in there. So if you're watching over on X, jump on over to the Arena. That's our preferred platform. There's still freedom of speech there. Of course, we have the YouTube channel, but we're kind of trying to lean on the Arena. I respect any place that lets you speak your mind without penalizing you. So let's go ahead and jump on into this. So this is our YouTube channel. We're actually going to start leaning on going back to promoting our old channel. So if you're not watching us already on the proper channel, look for this owl. That's your indicator that you're in the right place. And then also the old channel only has about 500 subscribers. The new channel that we were using was about 48,000. So we're going to start leaning on this and try to grow this channel. So if you could, please follow us there. If you are interested, you can follow me on X. And this is kind of where I post throughout the day, just different things that I find on different projects, DeFi focused stuff. Of course, Jeff is the airdrop guy, and he has his own channel. We'll get to that here in a second. And the Arena, I'm working on it, and I'm trying to find how to change this handle, but right now it's at _DCA. I'm trying to change that right now, but that's our Arena channel. And then, of course, you can join our Discord. All the links for these are down in the description on YouTube and on the Arena. So you can find all of the different socials and things like that. And then also, if you could, follow our brother channels. So again, this is Jeff over at the Blockchain Report. This is his channel where he talks about nothing but airdrops. He's really big into airdrop farming and does a great job with that. Let's see what else we got. The Blockchain Basement, Drew over at the Blockchain Basement, great based content. So he talks about crypto and kind of the macro when it comes to politics and things that affect investing and trading crypto and things like that. David and Jake over at DeFi University and Jake over at Luminary Assets, they both come on our Wednesday show and teach advanced strategies in DeFi. Of course, I have Taylor and Texas Jeff on Mondays, and they talk about wealth preservation, using wills, trusts, small businesses, things like that to mitigate taxes, and to protect your assets, potentially from lawsuits, whatever. We're all wanting to make money in crypto. We're all wanting to get rich in crypto. We're all wanting to get rich in investing. But you need to make sure that you take the proper steps. So as you're cashing out, of those assets or, doing different things with them, that you're mitigating your tax burden. So there's all kinds of ways you can do that using wills, trusts, living trusts, life insurance. I'm not, a financial advisor. I'm not a lawyer. Taylor is. He is an estate attorney. So he knows all the legalese on how to do this. He's has a couple of law firms of his own down in McKinney, Texas. So if you're in Texas, he can help you with all that. But anyway, moving on. Let's talk about automations in DeFi. Hey, what's up, Colin? How's it going, brother? Yeah, I'm just going to go live for a little while and talk about just some of the automations that people use, like the bots and things like that, in trading and in DeFi and in crypto, and kind of the pros and cons, because there are advantages, but with anything, there's always disadvantages as well. So let's go ahead and jump into it real quick. So some of the places that I'm familiar with automations is VFAT. VFAT is a DeFi aggregator. So it gives you access to a bunch of different dexes. So like Uniswap, Aerodrome, all of those types of places. it's a one-stop shop to where you can access not all, but most of the bigger liquidity pools. So this is a great tool. In our DeFi Academy, episode 3, I believe it is, talks about talks about the different tools that I use, and DeFi aggregators is one of those. Currently not using VFAT. I moved all my positions to Aerodrome in hopes that there might be some sort of airdrop with the new token coming out and the new platform that's going to get launched in Q2 of this year. So nothing official has come out that mentions any of that. I'm kind of just me hoping for the best. So let's see. So a lot of the automations on VFAT are things like auto compounding, auto rebalancing. If you're not familiar with what auto rebalancing is when you are in, let's actually look, see if I can pull something up real quick. Shit, I wish I had a position open. Let me connect my wallet real quick and see if I can show you, because I'm very visual. I know a lot of you out there are as well. Excuse me, I'm kind of stuffed up. All right. So let's see. Pools. There we go. All right. So say that we wanted to get into this on Uniswap on ETH mainnet. We wanted to get into this wrapped ETH USDT pool. And we got into it, and this is the current price. This is a ranged position. So basically, I would be getting into this, and the liquidity I'm providing is between 2,856 or 58 and 3,401. So that is where I would be providing liquidity. As long as it's in range, I'm earning yield. But if it goes out of range, I either have to wait for it to come back into range to start earning again, or you can use an automation called auto rebalancing. To try to make a long story short, there is a thing called impermanent loss. I won't get into it. It'll take too long. But as the price moves throughout this range, potentially you can, the amount that you have deposited, say you deposited $1,500 worth of wrapped ETH and $1,500 of USDT. As the price of wrapped ETH goes down, then it is going to sell off the USDT into wrapped ETH. So you're going to end up with more wrapped ETH. However, it's DCAing on the way down. So when you reach the bottom, you're going to have no USDT and all wrapped ETH. So you're going to have more wrapped ETH than you had before. More than, but it's the value of that is going to be less. So you might have like $2,700 or $2,800 instead of $3,000. So you've lost the overall value of, because the price went down. And of course, if you wait and the price goes back up, then, you can make that money back. But it's called impermanent loss. And the way that you make it permanent is exiting the position, because you're locking in that $300 or so of, kind of negative that you, got from it DCAing on the way down. Now you can stay in the position and wait for the price to come back and go back into range, or you can exit the position, but you lock in that permanent loss. Now, if you have a auto rebalance feature activated, and you have to opt into this on BFAT and a lot of other protocols, but if you have it auto rebalance, then while you're sleeping or at work or doing whatever, it's going to be auto rebalancing. And while it's doing that, it's going to be constantly locking in that impermanent loss. So you can see how this could be a negative thing, because as it's doing that, it's just constantly locking in more and more losses. the flip side can be true. And, if everything's pumping and, whatnot, then of course it can be locking in, profits as well. But for me, it's not worth the risk. I tend to stick to full range pools that are always in range. You don't earn as much, but it's a lot less maintenance. And then, of course, like lending strategies, staking, things like that. You're just always earning, and it's the basis of my portfolio. I don't earn as much as a lot of people. Some people are making like 80% APY, as an average in their portfolio. I might be making 30 or 40. 30 or 40 in investing, like traditional investing, 10% is huge. So 30%, 40%, I mean, that's great. So, a lot of people get a little too greedy, I'll just say, in crypto, because they see other people making, 1, 2, 300%, in a couple of hours on a trade or something. And they want that too. Me personally, I treat my investing more like a marathon than a sprint. So I don't like using the rebalance automation. Now, there is another automation called auto harvesting. So if you're in a liquidity pool and you just want to, say that you just want, anytime it reaches like $100, you want to go ahead and take those profits in a stable coin so that you're out of a volatile asset and you're just, building stables. And then maybe you're harvesting because you're living off of the yield that you're earning. So, maybe every week you have all your positions auto harvest. And then, over the, throughout the month, you have those stable coins in a fund. And, maybe you're using something like EtherFi, or you're using, a Coinbase card or something like that, that allows you to spend that. So you're actually augmenting your lifestyle with your DeFi. Maybe you're like me and you want to harvest that in, in ETH or in Bitcoin or in, Arrow or something like that, because you're actually trying to build your bags. Right now, the market's beat down. We've already had huge dumps. So I'm trying to build my bags right now because I'm long-term bullish on crypto. So I don't necessarily want to take it all in stables. Maybe if I thought it was going to go a lot lower, I would, so that I'd have dry powder to, buy in at lower prices. But honestly, me personally, I just like stacking assets. I have goals in mind that I want to hit. And once I hit those goals, I'll be DCAing out into stables, because I know of, ways that I can earn 10, 20% easily on stable coins. So if I have a couple $100,000, for every $100,000, if I'm making 10 or $20,000 a year on that, then, I can make, on $300,000, I can make anywhere between $30,000 and $60,000 extra, a year, just holding stables, and, and use that to build, new bags of crypto in, projects, and, and still keep, certain, projects, or, certain tokens long term, like Bitcoin, ETH, things like that. Let's see. Mark says, I'm trying to move everything to Arrow 2. Yeah, Arrow, I can't help but be bullish on Arrow. Ever since I sold all of my XRP and XLM and HBAR and all that after the pump, and I got into DeFi, I got into Arrow because Druth over at Blockchain Basement turned me on to it. And so I did a deep dive into it, and really, it was the first DeFi platform that I really sunk my teeth into. So I learned all about the locks, flight school bonuses. I even did a couple of videos on it, just, all the functionality of the old platform. And then as, new information's coming out on the new one, I've been doing content on that as well. But Arrow by far has been my biggest earner in DeFi. So, I was buying back when it was like 30 cents, and then, rode it all the way up to $2.20, and then rode it all the way back down and in between. I just keep stacking my bags because Arrow, I'm earning like on average 20 to 30% between my locks and my full range pools, Arrow USDC. And just keep stacking Arrow, because I have made more profits on my Arrow DeFi than I have on almost any other asset. Just because it's like clockwork. I mean, it's always between 20 and 30%. I've never seen it, out of that. So slow and steady. Slow and steady wins the race. All right, what do we got? Got 777 in the chat. Got Gojo in the chat. Nahar, what's up? What's up? Now, I appreciate all you that show up. I know that this is I know that weekends, people like to, kind of disconnect and, try to spend time with the family. And I totally get that. We all need to, kind of step away from crypto, step away from investing, spend some time with the family. So, I get it. Absolutely. Druth and Kelly turned me on to you. I think you're spot on with Arrow, learning a lot. Dude, I appreciate that. Yeah, no, Druth and Kelly, awesome guys. And yeah, I mean, before I started a channel, I was watching, back when it was BitBoy Crypto and all that. I was watching Drew and the crew, back then, 3, 4, 5 years ago. And up until now, I still do. Every morning I get up Monday through Friday and I watch Discover Crypto and I watch, Drew and Kelly and, the crew over there, because they have great content, and they're not afraid to point out, if something changes, if they're bullish on something and something changes about that project, they're not scared to come out and say it. All right. Let me go through just a couple of pros and cons. I made some bullet points, so forgive me if I'm just reading, but I want to make sure I don't miss anything. So, pros of using automations in DeFi: efficiency and time saving. Automations handle repetitive tasks like monitoring markets, executing trades, rebalancing portfolios without human intervention, freeing up users to focus on strategy other than manual operations. Again, yes, these can be very powerful tools when used properly. However, automations, they're still, AI and stuff like that is still developing. And you have to be careful also, who built that automation on Uniswap, those V4 hooks that, that they came out with. They're third-party apps. So people can build in, malicious stuff on those, and you can open yourself up to having your liquidity stolen. Now, that's not the case on all of them, but it's a possibility, with smart contracts, malicious smart contracts. You have to be so careful in this, in DeFi and in crypto and, what you connect your wallet to and things like that. There's always somebody out there looking to take what's yours. So please be careful. 24/7 operation. DeFi markets run continuously, and bots can operate around the clock, capitalizing on opportunities that might occur during off hours or in volatile conditions. I do automations that work for me 24/7. If you want to get technical, our liquidity pools, full range and range positions on Aerodrome, they're working for you 24/7. They are taking your liquidity through smart contracts, and they are allowing your liquidity to be used when people are swapping between the assets of the pool you're in. So if you're in an Arrow USDC pool, anytime somebody on Aerodrome, if it's on Aerodrome, is swapping between Arrow and USDC or USDC and Arrow, it is using your liquidity at 24/7, 365. If you're sleeping, it's fully automated. And you are earning small fees for that. It's an automation. Automation can be great, but again, you have to be careful which ones that you are using and make sure that you're fully knowledgeable about how they work. I've tested some of them out, and I don't use them anymore. And I'll get into some platforms, some DeFi platforms that are fully automated and have a lot of these automations actually built in that you can't opt out of, that I've chosen to stay away from. Emotionless decision making. Automations can remove human biases such as fear or greed, leading to more disciplined execution of predefined strategies, which can improve overall performance. So, software, it's not emotional. It's going to sell when you say to sell. Like if you're in a trade and you set a stop loss, that's an automation. It's, if you're sitting there and you're thinking, okay, I'm going to get out if it pumps to this. And then you see a huge green candle and that emotion comes up and you're like, oh shit, it's going to go higher. I'm not going to exit. And so you stay in and it goes higher. You're, oh shit, I'm going to stay in. And then all of a sudden it dumps on you. You didn't lock in those profits. So now you not only lost the profits, but potentially you got liquidated if you were using leverage, or now you're at a loss. If you had a stop loss or a take profit in there, then you might have been taking profit on the way up and locking in those profits. And if you had a stop loss and it dropped below that threshold that you set, then it got you out of that trade. And if you locked in profits on the way up and then you moved that stop loss up as the price was going up, then you exited the position in profit and you took profits on the way up. So automations, again, they can be a good thing and they can remove emotion from your decisions. Yield optimization. Tools like yield farming bots or auto rebalancers can dynamically shift assets to protocols offering the highest returns, potentially increasing APYs. Mamo is a good example of this. It's an AI. You can deposit your liquidity on there, and it leverages Moonwell and the vaults over on Moonwell to earn you yield. And it's constantly moving your assets around to optimize how much you earn. Mamo, the token, has taken some pretty hard hits. I still have my bag of Mamo. It's on the Mamo platform, and it's still earning me free Bitcoin. Not a ton, but 24/7, 365, that automation is making me more and more Bitcoin without impacting the amount of tokens, Mamo tokens that I have. So if Mamo goes back up, then I still have all my Mamo tokens. But the whole time that Mamo was going down, Mamo was going sideways, and when Mamo goes up, I am always earning free Bitcoin. So it's just cha-ching, 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 24/7, 365. Another one that I just got into with my Canton, my CC token. I've been looking for a place to earn with that, and I found the Braun wallet. Where I deposited my CC, and I'm earning 30% a month on my Canton. Currently it can change, but currently I'm earning about $600 a month off of about roughly $2,000 worth of liquidity. So that's, around 30%. And I'm just kind of giving some general numbers, but I did the math and it's around 30% a month or 360% a year. Huge, massive, and I'm very bullish on Canton. If those of you that don't know, quick shill of my bags. It's a really popular token right now, but I will show you why. It's not just because of hopium. Those of you that don't watch me on a regular basis, I am not an emotional. I don't do meme coins. I'm not an emotional person at all when it comes to my investing and DeFi and things like that. So this is Canton. This is RWA.xyz. Almost all of my decisions are made off of data. I am very logical. I'm all about facts. I don't care if a DeFi protocol is talking to an institution or has an NDA. I don't care about any of that. I care about who has actually built on the protocol and what value is actually being moved on the protocol. We are moving from, and I'm sorry if I'm jumping around a little bit here. I'm just kind of free flowing. We are moving from crypto being a speculative market to the crypto market that is based on utility. So before, crypto was nothing but retail and it was all emotion. If you look at the narratives that were running before, you had memes, you had metaverse, you had gaming, you had, all these different things that made projects pump. For the most part, if something was trending on social media, that's what was pumping. That's emotional retail. We are moving into institutional crypto, institutional DeFi and RWAs. Governments are drafting legislation. The first major US bill that was drafted and signed into law was the Genius Act. And that was all about stablecoins because that's the basis of crypto. That's how you onboard fiat. That's how you onboard, the traditional vehicles of value onto blockchain is through the stable coins because they're pegged to fiat, in this case, the US dollar, USDC, USDT, things like that, which is, the global currency, the reserve currency right now. But we are moving into a utility market. Now, in the way the big boys operate is when they do a valuation on a business or a company, it's usually based off of things like revenue it generates or the assets that it holds. So, it's those are the real things that are going to give value. Now, with crypto, that's hard because, and I'm going to use XRP as an example, because they had a lawsuit with the SEC. They were one of the few that could afford to fight the SEC, a year or two ago, or for quite a few years actually. But the judgment came out, and the judgment was that Judge Torres ruled that XRP and crypto in general, most cryptos, there's exceptions, aren't a security. So the fact that it's not a security is a double-edged sword. A lot of people celebrated it as a victory. Looking back, I see it as for retail and holders of XRP and other cryptos, I see it as potentially a very negative thing, because if it was a security in XRP's case, Ripple would have a legal fiduciary responsibility to XRP holders to ensure that they were profitable. So, they would have to do some kind of revenue sharing. They would have to do something that would, return some of that value or some of that profit to token holders. That's not the case. So now Ripple, they have 1 billion XRP tokens that unlock monthly that they can choose to relock or sell on the market. And that's what they do, is they sell most of it to fund their operations and to buy all these companies that they're buying because they're trying to become a bank. But I digress. I'll get away from XRP now. But that is the important thing to understand about these crypto projects is we're in price discovery right now. And the way that that price is going to be realized is it's going to be realized by how the value of these projects are tethered to the token. So if the project like Aerodrome, they do buybacks, and the way that the protocol works is the Aerodrome platform, there is an infinite supply of Aerodrome. They can, they mint it all the time. But 100% of the fees or the new Aero that is generated is either paid back to VE Aero locks, which is people like me and you that lock our Aero, for, anywhere from a week to 4 years. And you can, get a vote on, different liquidity pools, and you earn yield on that. So they pay out that yield in the new Aero tokens. Anything that's not paid out to VE Aero or locks then is max locked. They take that and they actually max lock the remainder in the protocol, or the platform does. So it's not like it's constantly dumping more arrow on the market. And a lot of people don't understand that. That's the tokenomics. But because they're doing that, then it is returning value back to the token holders. So I won't get into the nuances of that. Again, I don't want to get on too many rabbit trails. I'm doing it enough already. But you need to understand how the assets that you hold, how the tokenomics work, to better understand how bullish you should be on them. Because if the token that you're holding, it doesn't matter what the organization, the DAO, or the business that is that launched the token or that manages the token. It doesn't matter how successful they are if they're not returning the profits in some way back to the token holders. And again, XRP is one of those, because a lot of people like to think that, oh, Ripple's doing this and Ripple's doing that, and that's bullish for XRP. Not necessarily. That's bullish for Ripple, because there isn't necessarily a way for the profits, if Ripple does become a bank and they, do all these great things that they're trying to do, there isn't necessarily a way for that value or that profit to go back to token holders. Really, right now, the only thing that's pumping the value of XRP is the hopium or the hype on social media, because the old narrative that XRP was going to be used to move value isn't the case anymore, because they launched RLUSD, which is a stable coin on the XRPL. And that is what is currently being used to move the majority of the value. XRP, for the most part, is just a gas token, and it only takes 0.00001 XRP to do a transaction. So, you need to understand these things. And I pick on XRP a lot just because I used to be a huge XRP bull. It was my largest holding. And as the tokenomics and as the fundamentals changed when they launched RLUSD and things like that, I had to be real. I had to understand that the tokenomics and the fundamentals have changed. And I had to look at my thesis and say, do I still believe this is going to keep pumping? And so when it did pump, at the end of 2024, I sold. I saw that as an exit pump. And I could be wrong. I'm not telling you to sell all your XRP, but that's what I did. And I got into Aerodrome and a bunch of other stuff. So anyway, let's see what the chat has to say. All right, so let's keep on moving. Automations. All right, auto leverage and looping. Those of you that don't know, looping strategies is, we'll use borrowing and lending as an example. You can lend your crypto assets. So say that you have a bunch of USDC and you want to lend that out. There's places right now that you can go and you can earn anywhere from 5% up to 10, 20, sometimes 30% on stable coins, depending on the platform that you get on. And be careful, don't chase APYs or APRs, because usually the higher ones are on riskier platforms, ones that don't have as deep a liquidity, or maybe they're not as battle tested when it comes to hacks and things like that. Because if the protocol gets hacked, there is the potential that you can lose your liquidity, and it's up to the platform on if or how they repay that, if at all. Celsius is a perfect example of that. A lot of people lost a lot of liquidity when Celsius got hacked. So looping, you can lend it out, and we'll just say for 10%. And then you can borrow against that. So, but you're taking out leverage. So there's a potential for being liquidated. With stables, you don't have to worry about it as much unless the stable coin depegs or something along those lines. So not so much with stable coins, but say that you lend out your Bitcoin. and let's just say that you took out 80% loan on it. So say you had $100,000 that you lent out. Actually, you know what? I think I got a visual that I built on this. I'm very visual. So, and I know a lot of people are. So let's see. Let's see if this is the right account. Yeah, this is it. All right. Now just find which whiteboard I was using. There we go. Where is looping? Oh, here we go. All right. So this is looping. So you can lend and say that you're earning 5% lending out Bitcoin and used $100,000. You can borrow against that. So you're earning 5% on the $100,000. But again, with Bitcoin or any other, a volatile crypto, you have to be careful because you can get liquidated. So say that you just take out a 25%, you take out, $25,000 of the $100,000. Pretty safe bet with Bitcoin. Bitcoin would have to dip, like 70, 75%, depending on the platform, before you'd get liquidated. So, it's not as, chances of that happening, probably pretty good that that wouldn't happen. So, you can borrow against it, but say you're borrowing stables at 6%. So, obviously there's, a different dollar amount, but pretty much you're earning 5% on $100,000 and you're only paying interest of 6% on 25 grand. So when, you're going to end up earning more than that loan is costing you, just simple math. Now, something that you can do is you take that 25,000, you lend that 25,000 out down here in USDC and earn 10% on that. So now you're earning, roughly, $2,500 a year on that 25,000. You're earning 5% on the 100,000. And, but then you can do the same thing. You can borrow against that 25,000 and you can borrow stables again if you want. And say you only do $7,500. And then you can take that $7,500, you can lend that out, borrow against that. That's looping. Is you lend, borrow, lend out what you borrowed, borrow against that, lend out. But again, you have to keep an eye on this because you have to be, careful. There's automations, back to that topic. There's automations that can do this, but depending on the assets and how much, you take out, that you're borrowing against, each of your lends, it can become unprofitable very quickly, if the interest rates change because it's not a fixed rate. They're always changing. So if you're using an automation, potentially you could end up, getting liquidated. You can, end up losing money in a lot of these. So you need to be careful with automations. Kind of get, back to my original point. All right. What else we got? AI powered strategy execution. I talked about that with, what was it? Morpho. No, not Morpho. Freaking, what is that? Mammo. That's right. Sorry, getting a little brain twisted here. Mammo, just using AIs. Arbitrage bots. I've never used them, so I won't talk too much on that. Basically, arbitrage. Those of you that don't know, is taking advantage of the slight differences in prices on different platforms. A lot of people very early in crypto, a good example is the FTX founder, Sam Bankman-Fried. That's how he made a lot of his money initially. Was there was a marked difference between the Japanese crypto markets and the US ones. And he was taking advantage of that arbitrage by buying, at a lower price in one jurisdiction and then selling at a higher valuation in the different jurisdiction. And it takes large amounts of money to really make any kind of profits doing it, but that's how he got started. So there are arbitrage bots that are just constantly taking advantage of these small differences. And, again, done right, it can, be very profitable. Just something I haven't messed around with a whole lot. So I won't speak too high to its profitability, pros and cons. Trading and sniper bots. Never used them. I know a lot of people out there do, use them. Meme coins. A lot of people use the sniper bots on meme coin, getting in and out of meme coins just because it's a lot faster whenever, especially when a meme coin first launches, getting in, at the lowest possible entry before the price pumps. Because some meme coins, they come out and they just freaking pump. And by the time you're able to get in, you're buying a top. It just happens that quick. And so they use sniper bots to get in as early as possible. What else we got? Cross-chain automations. So, bridge swaps, things like that. Intent-based execution. Users specify outcomes. Maximize stablecoin yield. So this sounds like AI, like AI automations, things like that. Restaking and liquid staking automations, automatically compound. That's one that I have no issues with, is auto compounding. So compounding is, say that you are in a liquidity pool here, and as you're taking profits, say that you're using an automation to take profits to harvest. You can also do an automation where it auto compounds. So instead of just taking that liquidity out, if you're wanting to grow, that pool that you're in, say you started with $3,000, you can set it so that, every time that you earn $100 in yield, it just adds that to your, to your deposit. So, maybe each week you're earning $100 and you start out with 3,000. First week, if obviously if the price changes, it's going to change your deposit. But say you're in a stable coin, say you're in a USDC USDT pool, so that the price doesn't necessarily change. And say you're earning $100 a week. Each week you can have it auto compound back into that pool. So, the first week you would have 3,100. Second week, 3,200. Third week, 3,300. And each time that compounds, you're going to be earning on that higher amount. So instead of earning just on 3,000, after the first week, you're going to be earning on 3,100. Second week, 3,200. Third week, 3,300. And you can see how that, auto compounding over time is going to be very, very beneficial. So again, there are automations that do benefit. You don't have to necessarily keep as close of an eye on. All right, what else do we got? Sorry, lost you on Starlink there for a minute. I'm actually getting fiber internet this spring, so I won't have those glitches anymore. But yeah, climb. You can even lose everything like that. Yes, absolutely. You can get liquidated. In trading, obviously, when you take out leverage, but anytime that you use leverage, borrowing against your lend, you're taking leverage. You're using your deposit as the collateral for the borrow. It's thing as like your house. If you take out a loan against your house, if the value of the house drops for some reason below a certain threshold, the bank can actually foreclose. Even if you're making your payments. Oh, excuse me. They can foreclose. Um, so it's the same thing on any collateral. An auto loan, same thing. You're using the car as, or the vehicle as the collateral. In DeFi, in lending and borrowing, you're using the deposit as the collateral. So if it drops below a certain threshold, the smart contract is going to protect the protocol. It's going to protect, the other, people's liquidity on the platform, and they're going to liquidate you and make the other people whole. And ensure that the people that lent you the money that you borrow, that they get their money back. So that's, excuse me, that's how all of this works. So yeah, I mean, you really need to make sure that you understand if you're going to trade, if you're going to do DeFi, before you invest anything, you need to make sure that you understand all of the nuances. That's why I'm always stressing episode 8 in our DeFi Academy. If you haven't watched it, it's a great one. It's basically describes how I built out my portfolio. And again, I'm very, very conservative when it comes to my portfolio. I like sticking to staking because it's just good, steady yield earning. It depends on the asset. I mean, if the asset goes to shit, it doesn't matter if you were earning 16% or 1,000%. If the token isn't worth shit, it doesn't matter what you earned. But staking is really good. You can earn free, free crypto. You can earn, free yield, and lending. Lending, you can earn, respectable amounts of money. Like I said, anywhere from single digits to 30% or more, just off of lending your assets out. And then full range pools. My Arrow USDC pool, I have been doing that since I got into DeFi, so like over a year now. And let's take a look at what it's currently earning. USDC Arrow is currently earning 20.5%. So it's the low end of what I've seen it. And it's because the market's dead. If the market heats up again and people start, doing a lot of swaps and, things like that in DeFi, then that could go to 30, 40%. But 20% in a dead market, not bad. So, what was my point? I lost my point. Sorry. So yeah, I mean, it's just, that is, full range. So, yeah, full range pools, staking, and lending. If you build out your portfolio in those, that is probably the most risk off DeFi portfolio that you can do. And then use smaller amounts of your portfolio to do other things, to, trade, to get into range positions, things like that. Hey, what's up, Uncle Tommy? How's it going, brother? I mean, you can hang out and check out the the rest of the stream, and then start it from the beginning. I'm just kind of rambling, talking about automations and DeFi in general, and kind of the best way to go about this, because this market right now is the one of the best times to get into DeFi. Right now, if you're entering into crypto and you're getting into DeFi, we've been beat down. A lot of people have capitulated. They've gotten out of these markets. And not to say that, it's a guarantee that crypto's going to go up from here. But the odds of us going up, in my opinion, is a lot better than us continuing down to any great extent. Obviously different projects, have different risks. But the good solid projects, Bitcoin, Ethereum, Aerodrome, and this is just the stuff that I'm invested in. Canton, a ton of adoption. Actually, I never finished that train of thought. Let's go back to there real quick. If you're in good, solid projects that are actually addressing pain points, institutional pain points as far as tokenizing real world assets, moving value, cross border payments, all of those tokenized stocks and bonds. Those are the ones that are potentially going to last. All of these projects that were claiming they were, going to address issues and problems. Now is the time that they have to show your work. Who is actually using you, who is tokenizing, or who is moving value using your network. That is the point that we're at right now. And if that's not happening with your project, you need to really assess why you are in that project, because institutions and governments are building at scale in crypto right now. They're building out dApps, they're building out rails to digitize the traditional finance system. It's not going to be DeFi and TradFi at some point. It's just going to be finance, because everything is going to be DeFi basically. Instead of the old style, stocks, bonds, treasuries, real estate, things like that, the ownership of real estate, ownership of cars, car titles, stuff like that. That's all going to be on chain. It's all going to be tokenized. The California DMV already did that with Avalanche last I looked. But you can see Canton Network, $356 billion of value that is on Canton Network. It's almost 95% of the market share of the entire market of RWAs is being built out on Canton. I mean, we've been talking about this before the token went live. We were talking about this pretty much. There was a couple people that I saw that had mentioned it before us, but we were one of the first ones that were doing deep dives and specific shows, live shows on this project. And it's just, there's very few projects out there that I'm as bullish as I am on Canton. And there's no guarantee, because other than the place that I recently found to earn on Canton, or to earn with Canton, there is no guarantee that holding the token, that the token's going to go up. It's done pretty well, but there's no guarantee that the price is going to go up on Canton or anything else, even Bitcoin for that matter. If everyone decided to sell Bitcoin tomorrow, the price could dump. And depending on how much, people, sold, it could go all the way to zero, or, back to $1 or, something like that. Chances of that happening are pretty slim, but it's a possibility. Gold, if everybody decided that gold wasn't worth anything and everybody started selling their gold, price of gold can go to nothing. It's everything in this world. The only thing that gives it value is our perceived value of it. The dollar, it's backed by nothing. It's not backed by gold. It's not backed by anything really other than our debt, which is out of control. The dollar, if around the world, if everybody just said, we're not taking the dollar anymore, we don't accept the dollar anymore, it'd tank. It's just, and they're kind of doing that when it comes to not buying our debt, not buying, the U.S. treasuries. Because that's basically what it is, a representation of our debt, that they earn a yield off of for holding our debt. Yeah, good example, a bottle of water. If you have a bottle of water and you're sitting in your house and you're trying to sell it to somebody, let's go over to the tap and pour a glass of water. If you're in a desert and somebody's dying of thirst and you have a bottle of water, it's worth a lot There we go. That person that wants that bottle of water that's dying of thirst sees that bottle of water as being very valuable because their life might, is depending on it. So, you need to understand the psychology of, investors and investing and, what drives people to invest and what determines the value of your investments. Because once you understand that, the underlying layer of, how things have value, how is it that an asset holds value and how does that value move or change depending on, the macro environment, politics, war, political unrest, just, all of those different factors. That is what is going to give you a leg up on other people, when it comes to your investments. Let me see if there's anything else when it comes to automations. I want to make sure I touch on all this. Automation, autopilot on Aerodrome. A lot of people in our community, on our Discord, have been using this. Again, I'm not necessarily a fan. I haven't used it because I don't like auto rebalancing. I am not a fan of it. For the reasons I already stated. And then one platform that I tested out for quite a while and did nothing but bleed liquidity was Beefy. And I was earning some pretty good yields. I was earning a couple of 100% on AVAX position that I was in pretty steadily. And you can see, this is actually the old position that I was in. And it was just bleeding off. And the reason was because it has a bunch of automations. It has auto rebalancing and, a bunch of this in auto compounding. And so it was constantly auto compounding, which is a good thing, but it was constantly auto rebalancing, which just tore me up on impermanent loss. And it just kept on, bleeding my liquidity. And it just slowly, I was just watching it bleed off and bleed off and bleed off. And so finally, I just exited all my positions on Beefy. Not to say that you can't make money there. I know that I'm sure there's plenty of people that make money on Beefy, but the fees are super high. And that's the other thing you need to understand about these automations. Like on VFAT, on Beefy, they're charging fees for these automations. So depending on what those fees are, they're incentivized to rebalance you and auto compound you as much as possible. And that is just, eating up your profits and potentially eating into your principal as well, depending on, how many fees that you're generating or that's being generated. So these are all just these small nuances that you need to understand about these automations. So, I want to make sure that you all understand these things. Sorry. I want to make sure that you all understand these things. Hold on. Got to sneeze. Because when you start getting into, DeFi and you start getting into crypto and trading, it can seem very, very appealing to use these automations because, you look at it and it's like, oh, it just makes sense. It's going to auto compound or it's going to auto rebalance and keep me in range so that I can keep earning. But again, how much of a fee are they charging each time they auto rebalance? How much impermanent loss are you locking in when it auto rebalances? These are all factors that you need to understand before you use these automations. So kind of bottom line up front, to kind of wrap up the automation topic, please stay away from automations until you understand the fees and how they work and how they can potentially affect your position, your liquidity, that you are providing, in DeFi or your trade, the liquidity that you have in your trade. If you're, doing scalp trading, things like that, understand these things before you use them. Before you invest in anything, you should understand all the nuances. Before you invest in crypto, you should understand the project you're investing in. Again, know the tokenomics, know the fundamentals. And, if you don't know what that is, you definitely need to, be learning some stuff before you're putting money into it. Nobody cares more about your money than you do, other than the person that's trying to take it. And so there is a lot of really smart people out there that are looking to maliciously take it and that are just really good at trading, and they're really good at, preying on people's emotions, making it look like something is pumping so people buy in. And then as people are buying in, they're, selling off, so as it's pumping, they already bought in down here. And then they hype it up on social media, or, they do, start making purchases of their own to start showing some green candles. And then as everyone starts to FOMO in, they're selling off. As it's going up, they're selling off. And so, that's how they're making their profits. They're using people's emotions while they FOMO in, they're DCAing out. So, and they do that both directions, so you need to understand these things. And sometimes it's just better to buy and hold. Some of the most successful people in traditional finance and in crypto are just really good at buying and sitting on their hands and doing nothing, not watching prices, not going in and checking their bags constantly, just buying and holding long term. Pretty much almost any blue chip, if you bought Bitcoin over the years and just forgot about it, and that's kind of what I'm doing now with, a lot of the different ways you can earn with like the Coinbase card and things like that. I'm just earning free Bitcoin and letting it sit. I'm just forgetting that it's there and just letting it build, because if over the years, if you bought Bitcoin when it was $1 and $100 and $1,000 and $10,000 and $15,000 and $20,000 and $100,000, it's down from $100,000 now. But if that whole time you were buying, you'd be up. You'd be up in a big way, depending on how long ago you started buying and how much you were buying. So same thing with ETH. Back when ETH was, a couple of bucks or $80 or $100 or $1,000, if you were just buying that whole time and just sat on your hands, when it was dumping, you didn't do anything. When it pumped, you didn't do anything. And you were just constantly buying, you would be in a really good position. So sometimes doing nothing is more profitable than doing something. Just, a little bit of food for thought. Let me know if you have any questions. Aragorn started following us. I appreciate you, brother. Yeah. Hey, real quick, we're focusing. If you're following us on YouTube, or if you're not following us on YouTube, if you could, make sure you're following the right account. The logo is an owl. You can see it up here in the top of the screen here. That DeFi Wize owl. That's our logo on our YouTube channel, on the right one. It only has about 500 subscribers. For the past years, we've been trying to build the new channel, and it has like 48,000 subscribers. We're actually wanting to start to grow this channel instead. And so we're kind of focusing on it, and we're focusing on the arena. The arena is probably about 70% of our focus. I just like it because with YouTube, I just don't like how they censor what you say. And if you say the wrong thing, the AI will like penalize you, potentially, taking down your content, not allowing people to see your content, things like that. That's not the America that I, fought to protect. I spent 22 years, supporting and defending the Constitution, free speech, all that kind of stuff. And I don't want to support a platform that doesn't support that. So I'm focusing on growing our channel on Arena, because I can say what I want there without getting throttled, on YouTube. And probably just by saying that, our YouTube viewership is probably going to drop. That's what I'm talking about. I'm sick of that. So my focus is on X, and it's on the Arena. here for video, X for video, but mostly for posts. But if you could, please help us grow. Follow us on that YouTube channel, follow us on the arena, and follow us on X. But not seeing anybody with any questions. Was my explanations that good that you have absolutely zero questions? What up, Rodney? Yeah, we got all kinds of people in the chat over on Arena. Let's see. What else can we talk about? Oh, yeah. For some reason, it's not showing right now. I'll have to refresh. But Gina over on the arena, if you could throw her a follow, and Malik Matt on the arena. He's really cool guy, and I need to ask him about it. Super interesting background, it looks like, as a producer in the movie industry. So I want to ask him about that next time I'm on with him. This is the DeFi or DeFi Academy that I was talking about. And it's basically just the bare bones basics of what is DeFi. So, terminology, hot and cold wallets, the different tools that I use in DeFi, like Deck Screener, when I'm looking for my ranges, looking at charts. I'll show that real quick. You got to find great tools to use if you want to be profitable. So Deck Screener, it's a free tool, but you can see. This is a wrapped ETH USDC pool that me and a bunch of people in the community have been in for a while. But you can see, I mean, I'm not a TA guy, but I know how to find lines of support and resistance. And this is the range that I've been in for quite some time. Obviously, I got into it back here. Basically it's been in range since 3 November. And so for the past, 2 months, past a little over 2 months, it's been in range, earning. And sometimes as much as 50, 60%. You could narrow that range and earn more. So I could bring this range down to here. And by tightening that range, I'm going to earn more yield. But you can see there was a period of time that I was out of range here. There was a period of time I was out of range there. I could narrow the range further and say, you can see where it came up and touched a bunch here. You can see where it came up and touched here. You can see where it came up and touched here. Here it broke through. And then it's been, doing the same thing again. I could tighten it even further where I can earn, even more yield, APR or APY, but you can see it was out of range, even more of the time. So with range positions, it's all about, it's all about finding that sweet spot between the yield that you're earning and staying in range. And I prefer staying in range over a longer period of time than having, earning a couple of 1,000% APR, but you're never in range. It doesn't matter what the APR is. If you're not in range, you're not earning. So I prefer wider ranges where I'm in range longer. So again, this is where I'm at right now. Roughly there. And again, I've just been cha-ching, cha-ching, cha-ching 24/7, 365 for this entire time. And, sometimes it's, it might be 5 or 10%. And sometimes if there's a lot of activity, it's 50, 60% or more. But again, it's just constantly printing me free crypto. If it's on Aerodrome and it's staked, you're earning Aero. If it's unstaked, in this case, you'd be earning wrapped ETH and USDC. On Uniswap, you just earn the assets of the pool. So on Uniswap, if you're in a wrapped ETH USDC pool, you're just constantly earning more wrapped ETH and more USDC. The assets that potentially you're bullish on, that you're wanting to stack. Aero works a little bit different. If you're unstaked, you earn the assets, wrapped ETH and USDC. But they take a 10% fee that gets paid to VE Arrow holders, or the people that lock, like myself. If you stake it and you take your yield in the Arrow token, you earn 100% of it, not 90% like unstaked. Important nuances to understand if you're going to invest in on different protocols, because different protocols are different. That's why I stick to certain protocols. Is one, security, two, just kind of their credibility, depth of liquidity, the amount of volume that is done on the platform, because that's how we earn our fees. There's a lot of things that go into why it is that I personally use certain platforms. What else we got? Oh, excuse me. I won't get into that. Let's see. Let's see what's going on X real quick. Let's steer away from politics. Let's see. Canton. Here, let's do this. In Switzerland, Canton is 26 semi-sovereign states. Oh, cantons. So I guess the word cantons in Switzerland is the name of their states. Okay, so that's how they came up with the name for Canton. Is I guess it's the Swiss word for sovereign states with their own laws, languages, tax codes, all operating under one country. So those that don't know, that's Canton's whole thing. It's a network of networks. So all the different banks and institutions, the DTCC, the New York Stock Exchange, JP Morgan Chase, Wells Fargo, all these different organizations, they have their own internal networks that they don't want anyone outside of their organization to have visibility on. So what Canton Network does, those are called silos. And what Canton does is it connects those silos. So it allows for interoperability. It allows for value transfer, communication of data and value between the silos without giving full visibility of those siloed networks. I hope that makes sense. If it doesn't, let me know. I'm happy to explain it deeper. But that's what Canton Network is, and what makes it different than a lot of protocols out there. Like the XRPL, is it has that privacy layer, which is paramount when it comes to governments and organizations, institutional organizations and things like that. Is they want that privacy layer. On top of that, they have to have compliance. So a lot of people in crypto, I get it. I'm all about that, decentralization and, that sovereignty of, owning Bitcoin and things like that. But again, you need to remove emotion. The future financial system is going to be determined by the big players. And part of that is government and government legislation. Government legislation is going to have certain guardrails, and that's going to be KYC, know your customer. You're going to have to verify who you are. If you've gotten on to Coinbase or anything like that, you have to provide a picture of your photo of your government issued ID to show who you are. Anti-money laundering. They're going to have to comply with that. So, a lot of these different things, when you're sending value and receiving it, and in the future on chain, it's going to automatically, what used to be done with manual processes, doing cross-border payments and making sure that they're not in violation of any laws or regulations in the different in the different jurisdictions. So like Russia, they had sanctions put on them by the US. we're not allowed, or certain organizations and individuals aren't allowed to transact because of those those not tariffs. I just said the word. Never mind. You know what I'm saying. So sanctions. So what crypto is going to do is automate those processes. And what used to take, 5 to 10 business days to send a wire transfer is going to be somewhat instantaneous because it's going to be automated. The checks. So, like say I'm sending money to you and you're in another country. I'm in the US. I'm sending it to you. As I send that, it's automatically going to go through all of these different things and say, is it legal for me to be sending that to you wherever you're at? And it's going to check, your jurisdiction, my jurisdiction, is everything on the level? Does everything line up? And it's just like going to be this checklist, green check mark, green check mark, green check mark, green check mark, green check mark. Everything's good. All right. Then it shows up in your account. If it goes down and it's all green check marks, but one of them is, says, nope, this person hasn't KYC'd, or this person is in a jurisdiction that can't receive money from the US, then it will reject it and send that money back to me, or hold it in escrow, depending on, what the smart contract says. So, that is what Canton's doing. And that's why I'm so bullish on it, is because as of right now, pretty much all the major players are onboarding on Canton. Again, it does not mean that the token's going to go up. That you need to understand this. Again, I don't want people looking for just confirmation bias on, I see it a lot. And that's why I harp on XRP so much, is you see just channels, YouTube channels, endless YouTube channels and accounts on X that just constantly talk about XRP, and they do nothing but hype positive aspects, and they don't talk about the negative aspects, because there's no direct correlation between Ripple and the price of XRP. There just isn't, legally, there is absolutely nothing that Ripple is required to do legally to ensure that you profit from holding XRP. It's the same thing with Canton. And we have a interview coming up on the 20th of this month with Saul. He's the COO of Canton Network, and he's also one of the co-founders. He was one of the individuals that he was involved in writing the paper on Zcash. So he helped build out Zcash. He's very knowledgeable. I'm super excited about the interview. Hey, what's up, Malik? Hey, you're more than welcome to join me, brother. Hey, what's up, Jay? So yeah, we have an interview coming up with Shaw, and super excited about it. And I'm going to be asking him a lot of these questions, like how, is the Canton Network, the Canton Foundation, or any of that, is there anything on the table, or do you guys have anything in place currently, or are you planning on doing anything that is going to ensure that token holders make money, or profit, earn yield? Again, I found one, the Canton Foundation, where they are paying, basically, as of right now, 30% per month for holding Canton in the Braun wallet. And there's a bunch of stuff. We did a live and on Tuesday here in a couple days, me and Jeff, because I already did it. So Jeff is actually going to open an account with a Braun wallet, and is going to enter into a position and show all the different steps on how to do it, and show how you can earn with your Canton. And so that is the kind of thing that I look for when I invest in these projects, is how can I earn with this? How do I profit from holding this token, other than just crossing my fingers and hoping other people buy it to drive the price up so that I can sell it and use them as exit liquidity? Because that's basically what crypto has been up to now, is buying low in the bear market, waiting for it to get hyped and waiting for, everyone to get emotional and FOMO in, and then sell on the people that are FOMOing in that are new to crypto and make your money. And then they get dumped on and they either just say, screw this, I'm out, or they do it like I did and what a lot of you did. And you say, this interests me. Yeah, I lost money, but I want to learn how this works. And then you learn how it works, potentially buy in at the bear market, and you become one of the ones that, make money off the people that, ape in and, FOMO into crypto. And it's not exclusive to crypto. I'm not bagging on crypto. The traditional market's the same way. The only difference is, people are buying in at a lower valuation, and as the price goes up, they can sell. That's just how the world works. The difference is that historically, the traditional markets, these companies have a valuation, like a real valuation. They're only in business if they're profitable and making money. And if you own stock, they have a legal fiduciary responsibility to pay you yield or for, the price or the value of the stock to go up. And there's certain things they can and can't do. Whereas in crypto, there was none of that. That's being drafted now, but there was none of those protections. So until we have those protections in crypto, for the most part, it's just buy low and cross your fingers and hope it goes up so that you can sell and make some money. So, these are all those things that you need to understand about these markets before you invest. All right, let's see what else we can find here in the Twitter sphere. There's I got all kinds of political stuff going on. Oh, yeah. Careful with propaganda. It's out in force. So do things they don't do on. I will point this out. This kind of thing is very staged. You have very few people packed into a very small space with obviously a lot of printed signs, very professionally printed signs that a lot of them are the same. And then you get a bunch of people out there with social media that are in close, and you have everyone, packed in together to make it look like it's a lot more people than it actually is. So be real careful. And it's not just one side or the other. It's, just be real careful with what you digest on social media, because again, they're preying on your emotions. The more that you can learn to have discipline over your emotions, not just in investing, but in all aspects of your life. If you can have the discipline when you start to get emotional about anything, if you're arguing with your significant other, if you're at work and you're dealing with a coworker or a customer or something like that, and you can just take out that emotion and have a stoic mindset and process it logically, not allow the emotions to, get you to respond and, get that knee-jerk reaction. We've all done it. You're in the middle of an argument with your significant other. They say something, hurt your feelings. You snap back with something. It hurts their feelings. They snap back, and it just escalates into this huge argument. If you can stay unemotional, maybe they're having a bad day. They snap at you. And instead of acting emotionally, you just sit there and listen. And then when they're done and you ask them, are you done? Do you mind if I, respond? And, they let you respond, and you just let them know, all right, this is what I understand you just said. And you repeat back, this is what I heard. It gives them, gives them the chance to it shows them that you were listening to them, or at least trying to listen to them. And if you get it right, they're like, oh shit, they were actually sitting there listening and not just trying to formulate a response. And if you're wrong, they can say, well, no, that's not what I meant. I meant this. And it's like, oh, okay. And it might prevent a misunderstanding. That is how having an unemotional, logical mindset can allow you to interact with people and have a more positive outcome. And then once they verify, yes, that's what I meant, and you get that, okay, So understanding that, this is my response. And it brings down the temperature often. Sometimes there's just people that you're not going to be able to have a conversation with. But more often than not, it's going to show that you're listening. It's going to, allow them to process more. It's going to allow you to process more before you respond. Because that's what happens, like, especially on social media. Everyone just starts talking past each other. It's because everyone is, basically speaking from a place of emotion. But I digress. What else we got in here? Power Freedom Warriors, the core. Hoorah. They're all doing push-ups on the aircraft carrier, it looks like. What else we got? Solana says it will soon be built directly into X. I'd like to see their source for that. Again, I don't latch on to stuff like this. It's like I want to see, X come out. I want to see Elon Musk come out and make an announcement, or Solana to come out and make the actual announcement. Not to say that it won't happen. I'm just saying, you got to be careful. Because some people might see this and rush out and buy a bunch of Solana, and then somebody put this out there to get everybody to do that, so that it pumps, so they can sell it, and then whenever it comes out, it's not true and it dumps, they buy back in. So they're just buying those swings. You see what I'm saying? What do we got here? Oh, the night shift has arrived in Los Angeles. You got like 3 people. Yeah. And again, the whole emotion thing is, the news was all about the fraud in Minnesota. We did a bunch of stuff showing fraud in California. Me and Drew, over a year ago, we did one on the Climate Alliance. A bunch of tax dollars of our tax dollars went, billions and billions went to that got sent out to a bunch of NGOs run by the Weather Underground, or ex Weather Underground founders, like Eric Mann and a bunch of others that ended up funding the 8 months of looting and burning and violence that was going on in the U.S. There's all of that was starting to come out, and then all of a sudden, you get this shooting with ICE, and all of a sudden, that all the media attention's there. They're not paying attention to the fraud anymore. Pay no attention over here. Look at the new shiny object. Same thing happened with Epstein files. Everyone was up in arms about it. We want to see the Epstein files, and then they had a bunch of distractions. They understand the psychology, and they know how to distract us. But my point is, a lot of you probably don't know, over in Iran right now, there's huge protests. They're burning buildings over there. They're having a huge uprising, trying to get rid of the regime over there. It all started back when Venezuela, when Trump and our military went into Venezuela. It's been going on for a while. This young woman, usually in Iran, you have to be covered up because of Sharia law. She's she's rebelling here. She has her head uncovered, which is a no-no. I mean, you can get picked up on the street by the Sharia police, the enforcers that they have, and thrown into prison. She's showing a shoulder. I mean, that's basically nudity, to them, and smoking. And she's out in public burning a picture, of their leader. So, there's a lot going on right now, and a lot of people are being distracted. What do we got here? Oh shit! Then we got friggin' cats and ferrets trying to steal eggs. Oh, and AI is unhinged. Let's see. Any of you out there like seeing anything cool in the markets? Hit me up in the chat if you're seeing anything cool in the markets. I know that my brother Taylor, the estate attorney I was telling you about, that's on the Monday shows, he actually messaged me earlier and said a bunch of indicators were flipping bullish. Like ETH and Bitcoin was flipping bullish. And I know Drew over at Blockchain Basement has been talking about a double green dot on the trading charts for quite some time. Let's go to Coin Market Cap, see what the markets are doing. Not seeing anything too crazy. Usually around 3 or 4 o'clock on Sunday evening is where we start to get movements. It looks like earlier we had a little bit of a pump and then we lost that and went back down to where it was before the pump. Just a small one, nothing crazy. Canton, it's up 12% on the day. It's up to 14 and a half cents. Let me check my brawn position. Or my brawn wallet. See what my Canton's doing. I love checking my balances, man. Get that little endorphin hit. I'm up $250 from when I started. Like I said, I have had about $2,000 in there, and because of price appreciation and what I'm earning, I'm up $255. Nice. Here in a couple hours, I'll get another little cha-ching. So usually around 3:50 Pacific time. Always chuckle when people say specific instead of Pacific. Let's see. So yeah, 3:40 every day. Pacific time. I earn. Oh man, I gotta sneeze again. Hold on. I earn from my membership on Braun. I pay like $20 a month for the membership, but I earn. What was it? Let me. I want to make sure I get this right. I don't like giving out bad info. So I'm earning, as of right now, $1.66 a day for paying $20 a month to access, the Braun wallet, have all the functionality to where I can earn with my Canton. You don't have to do that, but I'm earning more than it costs me. So basically, roughly, I'm making $25 a month off of $20. And then my Canton and my Braun that I have, 10,000 of each token, because there's tiers. I want to say it's like 10,000, and then the next tier is like 50,000 or 100,000, and then 500,000, and then 1 million. But depending on what tier you're in is how much you can earn. And I don't have the liquidity to be doing those, a lot of those higher tiers. And I'd have to, even to be in the next one up, I'd probably have to sell most of my other holdings just to get into this. And I don't do that on anything. But I'm always looking for little ways to just, earn that, that little cha-ching, just, 24/7, 365. My liquidity pools on Aerodrome. I'm earning a couple arrow here, a couple arrow there. My Coinbase card, again, I'll show it real quick. I'm not going to show the number, but this bad boy, I earn anywhere from 2 to 4% on my purchases. So stuff that I'm already spending money on, my gas, whenever I go and fill up my truck, whenever I go buy groceries, whenever I pay, any of my bills, I just put it all on my Coinbase card. I'm spending that money already. I might as well get 2, 3, 4% back, and it's paid in Bitcoin. So I've already made a couple $100 just in the past, month or two. And if Bitcoin keeps going up, if Bitcoin 10x's, if I make, say I only made, if I stopped right now and I only had like $300 that I've earned, and it 10x's, that 300 turns into 3,000. So instead of 4%, it's 40%, that I was getting back. I mean, I hope that made sense, but basically it's just, I'm always looking for ways that I can earn yield. I am like a yield meth head. I always want to make sure that I'm earning as much as possible, because the more that you can stack now, potentially the better off you're going to be in the future. It depends on what projects you're invested in. If you're in a bunch of meme coins and those meme coins never pump and they just dump, of course you're going to lose everything. But if you're one of the lucky few and you profit on a meme coin, hats off to you. I personally would use a very small amount of your portfolio for those gambles, because and I tell this to everybody, for every person that gets rich on meme coins, there is a long line of people that lost everything. Because if you see somebody that's like, hey, I bought $100 of this meme coin and now I have $10 million. They have, 9 million, whatever, $100 short of $10 million. All of that liquidity came from a bunch of other people. Because it's not like, that liquidity just magically shows up. The only way that liquidity exists for them to be able to sell that token and cash out is if other people have injected liquidity. So for them to cash out $10 million, there's got to be more than $10 million of liquidity there of other people's money to cash out. So if you ever see somebody that's trying to tell you, invest in this meme coin, they are trying to pump their meme coin to use you as exit liquidity. And for every one of those people that got rich, there is hundreds, if not thousands or tens of thousands of people that lost everything. It is the definition of a Ponzi scheme. The ones that got in first get to, exit with other people's liquidity. So personally, if you're asking my opinion, stay away from meme coins unless you're using a very small amount. I mean, only use money that you would use at a blackjack table, or that you would bet on a football game. That's the mentality you need to have with meme coins and a lot of cryptos. Don't get me wrong, just a lot of cryptos in general. Because again, we don't have all the guardrails yet. There is no guarantees in crypto. It's very high risk. That's why there's the potential for high reward. The higher the risk, the more risk you're taking on any investment, the more reward you're going to have. That's why, VCs that get in very early on, different businesses and crypto projects, that's why they're able to cash out and, make a lot more than me and you that buy the stock later on. So anyway, let's see what else we can find. Hey, what's up, Josh? Man, I'm loving Arena so much more than YouTube. Just like the people as well in the chat, and just the people in Arena, just a lot more positive. It seems like there's always just like super negative people in the YouTube chats. The eye is in the chat. What's up, Lumberjack? What about white whale? What's white whale? Oh shit. Appreciate it. Josh and I just tipped us. I just tipped us $10 in Arena. I'm gonna go stake that here in a minute. Any Arena that anybody tips us into being staked. any decent amount is going to be staked in the Arena token. We want to do everything we can to try to make Arena successful, as a platform. Again, I want to support platforms that support full free speech. So, do with that as you will. What else we got? Deportations by presidents. What do we got? Chainlink needs to find a new way to reach people. I disagree. Chainlink is being adopted. I mean, hell, even Canton for interoperability, they're using Wormhole and Link, and Link is being used to upgrade the Swift system. Those of you that don't know, Swift handles 1/6 of all movement of liquidity across borders. From country to country, things like that. Swift is a very old system. I think it's like 50 years old. That whenever you wire money, that's for the most part what's used, and they're upgrading their system, because it was like 5 to 10 business days, and sometimes the transaction got lost and all that jazz. They're upgrading their system, and they partnered with Chainlink and Linea to do that. So, and retail is going to have a very small part in a lot of these narratives, because retail is going to use what institutions are building for a lot of these use cases. People using crypto won't even know they're using blockchain. They're going to be banking. They're going to be making purchases. They're going to be doing DeFi and not even know that they're using blockchain. That is what the future is going to look like, and the future financial system is going to look like, is those barriers to entry that we all had to learn to get involved in trading and get involved in crypto, and getting onboarded, and how to use cold wallets and hot wallets and browser wallets, and how to put liquidity on DeFi protocols, things like that. All of those barriers to entry that we had to deal with, the future people aren't going to have to deal with that. But by the time they get involved, a lot of the yield that we're earning in DeFi, and a lot of yield that is being earned, and a lot of price appreciation on these projects, isn't going to be as juicy for them. Early adopters, you're taking more risk. There's more potential for upside. It's like the .coms. Those of you that are old enough, if you're an old bastard like me, you remember that in the .com era, that if you had a .com and you had an IPO, initial public offering, and you had a stock, people threw money at you. People couldn't invest fast enough. But there was a huge bubble. And when it crashed, when all these .coms had to prove that they had a product that was profitable, like a ton of them went away. I don't know the exact number, but it was like 90% of them went away. And certain ones, like Google, Amazon, things like that, those continued to profit because they were able to capture enough of the market to where they were profitable. And because it was a stock, again, they had a fiduciary responsibility to the stockholders. So the price of the stock was going up. They were doing buybacks. They were, doing splits. They were doing all these different things that benefit the stockholders. Again, we don't have that in crypto yet. So you're taking on a lot more risk. Papa Gooth, what we got here? Exactly. People moving money in any direction will be participating. Exactly. So here in the not too distant future, as this legislation is drafted and passed, the Clarity Act right now is making its way through the legislators, and getting voted on by the House and the Senate, and all those things, and eventually make its way to Trump's desk, or whoever is president at the time, if it doesn't happen during his admin, which I'm sure it will. It's one of their top priorities. It's going to get to a point to where again, JP Morgan Chase, they're already launched on Canton. Their JP Morgan coin is on Canton Network. You're seeing USD1, Trump's World Liberty Fi stablecoin. It's launched on, I think, the XRPL. It's on Plume. That's what I'm talking about, is the network. The future financial network is being built out right now. And what you need to pay attention to is what projects are part of that network. Which ones are being integrated. And Link, back to my original point, is the one that is the interoperability layer that allows a lot of these to communicate. Again, Canton is one of them. It's using Link and others as its interoperability layer so that it can communicate across different networks. So, if some value wants to be moved from Canton over to Solana, or from Solana over to Base, or from Base over to ETH mainnet, you need to have an interoperability layer. And part of that is, up until recently, has been bridges. Bridges are how you bridge liquidity from one chain to another. A lot of automation is being launched right now, where a Base, Aerodrome is about to launch here in Q2 on the Aerodrome platform. Whenever you want to get into a liquidity pool, as of right now, if you want to get into an ETH USDC liquidity pool, you have to have a certain amount of liquidity. Say you have a bunch of ETH. Say you have $10,000 of ETH, and you want to get in that ETH USDC pool. You have to go, and if that ETH is on ETH mainnet, you have to bridge that over to Base network. Then you have to sell half of your ETH into USDC so that you have an equal amount of ETH and an equal amount of USDC. And there's a lot of nuances, but just for the sake of argument, you have an equal amount of both. And then you can enter the liquidity pool. And if you got to make sure you have the gas and all that to pay the fees. With the automations that Aerodrome's coming out with, you can just have whatever token. And basically, as long as it has value, as long as there's liquidity there, if you have $10,000 worth of whatever, you can just say, I want to use this liquidity to go into this pool. And it will automatically find the best prices for swaps, the amount of fees you have to pay. It'll find the cheapest fees. It will bridge. It will do everything for you automatically and enter you into that pool. So that's going to eliminate, that by itself is going to eliminate a ton of barriers to entry for people in the DeFi. It's what they did with Morpho. Those of you that aren't familiar, on Coinbase already offers borrowing and lending of ETH and Bitcoin. The way that they do that, it's not done on Coinbase. But to the untrained eye, people don't understand that. It's done with Morpho, which is a borrowing and lending platform that, much like Aave, on Base network. But that is where the liquidity is housed. That if you're lending, that's where your liquidity sits. If you're borrowing, that's where you're borrowing it from. So the way that the normies interact with Morpho is from their Coinbase account. So they don't have to, they don't have to have a wallet. They don't have to transfer it to that wallet. They don't have to connect to Morpho. They don't have to figure out how the protocol works. They don't have to do any of that. They can deposit their liquidity on Coinbase. They can have a bunch of Bitcoin and just use it like a Bitcoin savings account, lend it out, make a couple of percent or whatever, it's, earning right now, and just let it sit there. And it just does it because they went click, lend. That's it. No wallets, no, sending and receiving and worrying about sending it to the wrong address and, losing it. We've all done it. We've all sent, some crypto and it never shows up on the other end because we put the wrong address in or, fat fingered something or whatever. So this is what I'm talking about with crypto and why I'm so laser focused on DeFi and RWAs. It's where all the money's being invested. right now. When was the last time you heard about gaming as a narrative? Where is all the people that are, launching and, the millions and billions of dollars that are, where game developers are building on crypto? I mean, I haven't heard of anytime recently, not since AVAX launched that on the grid or off the grid. It looked like a cool game. Don't get me wrong. And it's a use case. And I think it's going to, do quite well in the future. Just because a lot of the functionality that offers, as far as skins and, guns and all that kind of stuff that you buy in game, it allows you to actually own it and potentially use it, across other games. Or if a new game comes out, you can use like old skins that you had or, old guns that you earned and, things like that. But if you look at everything that's being talked about for like the past year almost, it's been AI and it's been DeFi and RWAs. And if you look at legislators, they are only focused on DeFi and RWAs, coming up with legislation for that. If you look at institutions, they are laser focused on tokenizing. They are laser focused on building on blockchain. That is where my focus is, because you're talking trillions upon trillions upon trillions of dollars daily that is moved in the traditional finance system. And all of that, every transfer is a fee. Every movement of anything of value is a fee. And yeah, it might be a small fee, but it's just constantly 24/7, 365 racking up. And if you're providing liquidity, which is required for, those transfers, you're earning those fees. Historically, traditionally, banks and institutions are the ones that were earning those fees on our money. When you deposit your money in a savings account, in a traditional savings account, the bank was taking your money and other people's money, lumping it together, and they were investing it. They were, buying commercial real estate. They were giving auto loans. They were giving home loans. They were lending out your money, potentially back to you. And they were charging 5, 6, 7, 8, 9, 10% or more, APR on those loans. How much of that did you see? They were using your liquidity to earn money and giving you like 0.1% or 0.01% on your deposit. It's theft. In DeFi, we, the people, can have liquidity and lend it out, and we earn the yield, not the bank. And that's why the banks and institutions forever, they had people like Elizabeth Warren, and I don't care if she has a D or an R by her name. She's, one of the heads of the finance committee here in the US. She was using Gary Gensler, and I'm not, this isn't speculation. There's documentation that came out where she was, called him to speak before the, they had a panel. Having a brain fart again. I know that's not what it's called, but they were having a hearing, congressional hearing, and called him and supposedly was going to grill him to the SEC, the Securities and Exchange Commission. And ahead of time, they caught her emailing him questions she was going to ask and him to look over the questions and make sure that they were okay. And this is all on record. And Elizabeth Warren has gotten rich in office. And a lot of it is from banks and institutions because she does their bidding. And this is all politicians. They all take special interest money. They all have lobbyists that find legal ways to contribute to their campaign funds and all of that. It's just dirty politics. I think it's all legal, but it doesn't mean it's right. I digress. So they've been fighting against crypto, and that's, the XRP lawsuit, the Ripple lawsuit. That's what that was all about. Gary Gensler was going after XRP. It went after a bunch of other people that weren't big enough to be able to fight it. And so they had to go out of business. They were winning. And then Trump got into office and all of that changed. You saw the whole climate change. And that's when JP Morgan Chase, Diamond, and all the other ones that was calling Bitcoin a pet rock. They were calling crypto a scam. All of that stuff. All of a sudden, all of those guys are bullish on Bitcoin and bullish on crypto, and coming out and talking about how they're building on on Ethereum, and it was like overnight. Those of you that were paying attention saw it. It's insane to me. But they are fighting this Clarity Act, because in this Clarity Act, there's a lot of the guardrails, a lot of the legislation for DeFi. And one of them that they're fighting is they don't want us to be able to earn yield on stable coins, because again, historically, they had a monopoly on that. Only they are allowed to earn on our money. We're not allowed to earn on our money, only them. So, yeah, it's going to be very interesting. Maybe I'll start wrapping this up. I've been yammering on for 2 hours now. But oh, what up, NFA? Abdul and Nahar. We got Bithy. I saw you in the chats earlier. Hey, welcome, man. I appreciate you following us. And the NFA gave us some AVAX. I'll transfer that into Arena and stake that, brother. I appreciate it. I really do appreciate all the support, over here on Arena. I mean, it's such a breath of fresh air. I mean, we've been going for like this past October was a year that since we launched DeFi Crypto and airdrops, and we really haven't monetized at all. And reason being is we want to make sure that people understand everything we talk about here is I want everyone to understand that we come from a place of integrity, because above all, I'll never compromise my integrity. We will not talk about a project here. We will not get paid to talk about a project here in crypto or paid in any way whatsoever. I don't want to monetize our YouTube channel just because it creates the appearance, even if it's not true, it would create the appearance that we would be saying whatever we needed to say to get eyeballs, because that's how you make money in social media, is, by the amount of followers you have and the amount of engagement that you get. So you see it in a lot of crypto influencers, and I'm not bagging on them. They're trying to make a buck, but a lot of them will just say or do whatever they have to get eyeballs and to get engagement. I want you all to understand that I'm going to say the unpopular thing sometimes, and I could be wrong, but it's genuinely how I feel, and it's genuinely what I see. So the way that we're choosing to monetize, and that's why I love the Arena so much, is the tipping and things like that is just you showing appreciation and supporting us. And I appreciate that. If people subscribe to our newsletter because they find value in it, DeFi Wize newsletter. I'll do a little bit of shilling here real quick. Me and my brother Taylor. My brother Taylor is an amazing businessman and a phenom when it comes to investing. Like, he's better at DeFi than I am, and he just started not too long ago. He has a lot more money, and he's a lot more risk on than I am. But no. So me and him launched a couple months ago. We launched a newsletter. Come on, you can do it. So this is it. It's just a DeFi Wize, Wize with a Z. But here, I'll show you the newsletter. This was Fridays. So, and it gets emailed to your email Monday through Friday. Every morning, I get up at 4 a.m. He gets up at 4 a.m, and we put this together. So basically, just kind of like the crypto markets. What's going on in the crypto markets. Oh shit! Let me share that. So this is it. It just goes over what's going on in the crypto markets, for that day, key themes, ETF flows, altcoin rotations, the sentiment, the outlook. Same thing for the TradFi markets. We have the summaries. So basically the ranges, like the trading ranges, and what the trend bias is, if it's neutral, bullish, bearish, whatever. And then of course, kind of the upper end and lower end. of, the trading range, when you might want to enter and when you might want to exit, things like that. A little bit about key developments, so some of the highlights in the news, for that day. The 3-month macro outlook on Bitcoin and Ethereum. Just, some different notes. Bullish bias assets should be accumulated closer to buy ranges rather than at mid-range prices. Just, kind of basic stuff. Got DeFi. So these are ranges that I'm personally using. This isn't just stuff I put out for you all, but I have narrow and wide ranges that people have been using. For the most part, like I said, since we launched, these have all stayed in range. I have not moved a lot of these levels since we launched the newsletter. So this whole time, these past couple of months, people that have gotten our newsletter have just been earning in these liquidity pools. Bitcoin wrapped ETH, Bitcoin Arrow wrapped ETH USDC. We've just been printing profits. And then just little clips, that I find on like Twitter and, different news articles and stuff like that. Just, again, what's going on in the markets. So it's about a 5 to 10 minute read to go over. And it's $20 a month. And it's just one way that you can get some value, but at the same time, you can support the channel. So, that's the big thing. We just want to make sure that that the only way that we're monetized is ways that you choose to give us your money. We don't want to monetize the channel to where, we're, again, saying whatever is viral at the moment or using clickbait titles to get more people to watch so that YouTube pays us more. That's kind of what we're all about here. And I mean, to be honest, for the past year, we're just getting to the point to where we're break even. But for the most part, over the past year, we've been paying out of pocket for, all the different, streaming platforms and AIs that we use to make like the thumbnails and, all of that sort of stuff. Me and Jeff have been paying for all that out of pocket. So it's actually cost us money to do this channel. We're not very great businessmen, obviously, but we're finally getting to a point to where we earn enough from the newsletter and from the tips and things like that, that it's more break even. So I really do, long story short, I really do appreciate all of you out there that show up and support the channel. Papa Goose, now that you're having banks, i.e. BlackRock, JP Morgan, etc., getting into crypto game, I think we will see a lot less of this. They will, however, find a way to lock down our liquidity. Absolutely. If you think they're not in the room with these legislators or one of their lobbyists isn't in the room with these legislators when they're coming up with this legislation, you don't understand how government works. Coinbase has been in the room. That's somewhat to our benefit. Who knows kind of what angle they're taking, but you have Coinbase and others, Plume Network. They've been in the room. There's a lot of different individuals and organizations that have a vested interest on how this legislation is drafted and the wording of it. So everybody wants to be in the room, and you need to pay attention to who's being let in the room, because those are the ones that have the legislators' ears and are going to be in the most advantageous position. And they're going to ensure that as they see this legislation evolve, that they stay in compliance. So a perfect example is the Genius Act, the stablecoin legislation. In the US, for a stablecoin to be compliant, to be used in the new financial system, it has to be backed 1-to-1 with the US dollar or a US dollar equivalent. So, a treasury, a bond or something. So you're going to see a lot of stable coins that aren't going to be compliant. Circle's USDC is. Tether, potentially, they're going to have to probably be a lot more transparent with how they are, what assets they're using. I know Tether owns a ton of US debt. So that is backed, that would be in compliance. They're buying treasuries. They're buying US debt. So but if they have $5 trillion worth of USDT out there, they have to have $5 trillion worth of US dollars or US dollar equivalent to be fully compliant. So we're going to see that evolve. But again, yeah, this is just our little pet project that's done right very well. Like pretty much everybody I've talked to that gets the newsletter, I've been getting some very positive feedback in our Discord, where they're earning really, really well, and the news that they get is doing quite well. What else? Yeah, Papa Gooth. I spend a ton of time sitting right here doing this, especially since it's wintertime. There's not a ton to do outside. So I usually get up at 4 in the morning, 5 in the morning, feed my cat, get my tea, and get to work. And sometimes I'm here 16 hours a day and been doing that for the past 6 years, off and on, of course. I'm not like I'm just every single day, but if I don't have something else going on, if I'm not traveling or doing something like that, I'm sitting here and I'm learning about crypto. I'm learning about DeFi so that I can try to help educate you all. I'm building content. I'm streaming. Building out thumbnails and doing research and deep dives, so learning about these new protocols and this new Arrow platform that's coming out, and that's part of the gig. But again, it's not like I work for a company and get a paycheck for doing it. I do it for love of the game. That's part of, yeah, could I monetize the channel and potentially make a bunch of money off that? Yeah. But again, I'm trying to build something different here. I'm trying to build something that you all out there can know that if you hear something here, that it's based on actual facts and data. It's not based on, if I interview somebody, it's not because they paid me at $10,000 to come on and I'm not going to give them a bunch of softball questions to make their project look good. When Shaw comes on, I've already talked to him about it and he's cool with it. I'm like, I want to ask you, stuff that I'm seeing on Twitter, the naysayers, the negative people that are, saying bad things about Canton. I might ask him some of those questions because some of them, are legitimate questions. Like, how does holding the Canton token or the CC token, how does the success of the Canton network, how does that translate to price go up on the token? Or how does that translate to places I can put that CC token and potentially earn yield for supporting the network? Those are the kinds of questions I want to ask. Yeah, it might put, people in an awkward position to where they have to say, they might not have an answer. I'm sure he will. But some projects, I doubt they'd be able to say that. I've put the challenge out there to any of the XRP maxis, the other influencers that are constantly, putting out bullish info about XRP. Hey, come on the show. Let's have an open and honest debate. And I'll, you can have to tell me how I'm wrong. If I'm wrong, I'll admit I'm wrong. All the stuff that I say about XRP, I can show you on the Ripple website where it says almost exactly what I keep saying over and over again. I can show you the data. Hell, I can show you. This is something that I've been saying for I don't know how long about RLUSD. RLUSD. Boom. So again, data. RWA.XYZ, RLUSD is the stablecoin on the XRP ledger. You would think. But look at this. Ripple's own stablecoin, RLUSD, the stablecoin that they launched on the XRP ledger that's supposed to, move the value on the XRP ledger. 76% of it is on the Ethereum mainnet. It's not even on the XRP ledger. It's moving value on the Ethereum mainnet. Now, it used to be 60%. Now it's almost 76%. So that shows a trend that more of it is going over to Ethereum mainnet. If it's moving value on Ethereum mainnet, I would like to see somebody show me how that benefits XRP. And because you're not even using XRP for gas, you're using RLUSD to move the value, and you're using Ethereum to pay the gas, not XRP. So anytime that RLUSD is moved, and again, I could be wrong. Please come on and show me where I'm wrong, but all my research supports this. Any RLUSD that is used on Ethereum mainnet to move value has absolutely no benefit for XRP. And that's why I got out of XRP. I sold all my XRP because I saw this coming. And not to say that I'm a genius. It's just the whole narrative. If you've been in crypto long enough, all through the bear market, you heard that the whole thesis and all the influencers, the entire reason that they said XRP had to be $100, $1,000, $10,000 was it was going to move all the value for cross-border payments. Trillions and trillions had to be moved. There's only 100 billion XRP tokens. So to move all that value, it had to be a large valuation to move all that value. And that made sense to me, if they moved all the value. It was going to replace Swift, but Swift upgraded. They used Link and Linea, and they're upgrading their system. I don't think they're going to be replaced. You have Canton Network that's being mass adopted because it has KYC and AML. It has all the compliance stuff natively built in. It has all the interoperability already built in. It has the privacy layer already built in. It has all these things that institutions want already built in. That's why I sold my XRP, is they launched RLUSD. Nobody wants to move value with a volatile asset. I always use this example. If I was going to send you $1 billion and I used the XRP ledger and I used XRP and I sent that to you, and the price of XRP at some point during that transaction goes down 1%. I sent you $1 billion. You're going to get $1 billion minus $10 million. So $10 million was lost in that transaction because of a volatile asset. Banks and institutions told Ripple this. And that is why Ripple came out with RLUSD, a stable coin that is compliant with US legislation. It's backed 1-to-1 with the US dollar. The reason they did that is what is going to move value on the XRP ledger and Ethereum. XRP is only going to be used as gas as of right now. There are certain instances, very small instances that XRP is still used, but for the most part, RLUSD is what's going to be used. I've challenged all of the major XRP bull maxi influencers to come on the channel. Please explain to me how I'm wrong. And not a single one has taken me up on it. So like I said, be very careful who you listen to, because I want to know, first of all, how there is so many XRP maxi channels and all they do is talk about XRP They have huge followings because, again, they say what people want to hear. There's a huge XRP army out there because of the boomers and all the people that see all the social media posts about it, and so they buy it, and then they want to learn about it, of course, and so they Google XRP, they Google Ripple, and of course get all of the ones that are saying nothing but positive stuff about it. So yeah, it gets a lot of eyeballs, a lot of engagement. Sure, I could sit here and say nothing but positive things about XRP and get a bunch of followers and stuff like that. But again, I'm going to tell you how I see it. I'm not going to say what's popular to get your eyeballs. I'm going to say the truth, whatever that is. Again, I had 40,000 XRP at one point. I was in like the top 3% or 2% of holders. I sold it because I saw the writing on the wall. Oh, shit. Got a little deer sitting under a tree outside. So you really got to be careful who you listen to. But I want to know, because successful influencers out there that have like multi-million-dollar companies built around their channel, and all they talk about is XRP. And I have no evidence of it, but I wonder if somehow they're incentivized to talk about it. Like if they're paid by some group or organization, I won't name any, but they're paid to hype it, to get the price to go up. One fact I will point out is, Ripple is getting to a point to where they're earning, starting to earn some money off of their services that they're offering. But for a long time, all of their operations was paid for by them selling the XRP that they hold in escrow. 1 billion tokens each month are unlocked. A lot of times they relock a lot of it, but a lot of times they sell a lot of it. And the way that they were paying for their office buildings and the lights and the salaries and buying all these companies that they're buying to become a bank, and all the different fees and licensing that they have to do to become a bank. That's all being paid for with the liquidity that all these people buying XRP is providing. And again, XRP is not a stock. You own no part of Ripple by holding XRP. I just hope that you're not one of those people that saw a social media post and put your life savings in XRP thinking you're going to get rich. Will the price go up? I think so. But is it going to go to 1,000, 10,000? I don't think so. I mean, I hope I'm wrong, and I hope that you get rich. But I think it's more likely that as this ecosystem matures and as these assets mature, that people are going to start to understand how these companies and how these projects are valuated. And as they do, they're going to understand that some of these tokens actually have no value other than being, really cheap gas to use the network. And instead of being worth a couple of dollars, it might be worth a couple of cents or fractions of a cent when the actual, price discovery happens. And, we have to, be willing to admit that a lot of these projects, we might not see all-time highs again. The price might go down and the actual value of some of these tokens might be less than what we bought in at. That's just a reality. That's the risk we take getting involved this early. So yeah, no, yeah. XRP, you don't even get voting rights. I mean, that's how, my arrow, that's how I, earn yield on my arrow, on my locks, is I get to vote on, which pools are going to get, liquidity. And, for that, I earn yield. So, yeah, I mean, you can't even do that with XRP. really the only way you can make money with XRP, because the DeFi on the XRPL is almost non-existent, is using a wrapped version. So Coinbase wrapped XRP, or something along those lines, or trading it. That's really, providing liquidity for swaps and trading it is really all you can do that I've seen. But guess I'll just leave you guys with that. Let's see how we're doing. All right. Yeah, I guess I'll bring this to a close. I got some chores I got to do, and I've been going for about 2.5 hours. But I appreciate y'all. And yeah, make sure you join us tomorrow, 10 a.m. Pacific Standard Time, 1 o'clock Eastern. I'm going to have Taylor, the estate attorney, and traditional finance Jeff, licensed financial advisor, on, and we're going to be talking about, as always, we're going to be talking about wealth preservation and ways to protect your wealth. So if you do end up making a bunch of money on, in crypto or in regular investing or real estate or whatever, it's from professionals, a lawyer and a licensed financial advisor. How to protect that, how to use wills, trusts, small business, formation, structured life insurance, things like that to protect that. But again, hope you tune in for that. That's our Money Talks Monday episode, and hope to see you then. Till next time, Veteran Crypto out.